Oil prices are still falling, but not so good for oil exporting countries such as Iran. That country is already exporting lower levels of oil due to international sanctions. Mr. Nathan King joins me here on the set with more on what's behind this slump, I guess, or slide in oil prices.
Yeah, especially for Iran, Phil. You know it's been the perfect storm for oil prices. Slowing economies in China and Germany means less demand. US shale oil production has boomed, creating more supply. OPEC states refuse to cut production so far. All of this has created a glut. Oil prices are down and could stay down for months, if not years. And this could be more belt tightening ahead for Tehran.
Just a few months ago, Iran's economy was improving. Inflation was down, and sanctions relief under an interim nuclear accord had brought billions of dollars back into the country. But with oil prices in continued freefall, Iran's weak economic recovery is in danger. Like Russia, Venezuela, and other oil producers, Iran needs higher oil prices just to break even. This chart shows where oil prices need to be for all these nations to balance their budgets. While Gulf states like Qatar can tolerate oil prices around $50 a barrel and Saudi Arabia somewhere north of 90, Iran needs the price of crude to be much higher.
For them to have the budget they'd like, they need about $125 a barrel. And my understanding is for their next budget, they're calculating it at $70 a barrel. So they're going to have to cut back on a number of things in an economy that's already in pretty bad shape.
Prices could climb if OPEC members cut production, especially Saudi Arabia, the world's second largest oil producer. Without naming names, some Iranian officials say regional rivals have conspired to keep prices low, possibly to help the US pressure Iran to sign a long-term deal over its disputed nuclear program. But oil analysts say the Saudis are trying to make it more expensive for the US to produce shale oil.
Once oil prices get to be 80 or below, you start to see the profits from shale and the incentive for investment dry up, and you need a lot of continued investment for shale. So I think that was a secondary incentive for the Saudis to slow down the shale revolution.
Whatever the motives, Tehran is feeling the pinch, just as the deadline to sign a nuclear deal approaches on November the 24th. A deal could, however, have a boomerang effect on Iran. Once free to boost production, an increase in Iranian oil exports could keep world prices lower.
Yeah, and it's not just Iran that's feeling the pinch. By some estimates, most of the world's 19 major oil-producing states need oil above $85 a barrel to break even. So a lot of pressure on OPEC to cut.
It's absolutely fascinating, but realistically, how likely is that going to happen, the cuts?
Well, you know, if you cut, the oil price goes up. So what do people do? They buy less oil and they look into renewables like solar, wind, all this sort of stuff that China and the US have been talking about all week. So the Saudis, as one of the biggest producers and also the most sophisticated players in the market, have tried to encourage OPEC to allow the market to decide. So any intervention in terms of production always has a political fallback as well. So we'll have to wait and see. But you know, the fact that we're talking about oil at $70 a barrel when these countries need 120, 130 is quite incredible.
Some people didn't like it when oil was high, and some people don't like it when oil is low. Nate, thank you very much. Have a great weekend.
Thank you.